The McAlvany Weekly Commentary, covering monetary, economic, and geopolitical news events.
I don't know if coming into this role, he says to himself, I've been a businessman all my life. I'm a businessman no longer. I'm the President of the United States, and this role requires certain responsibilities that I have to take very seriously. And again, is there the possibility of a transformation of the man? I don't know, and time will tell. I don't know what he's going to do, and I don't know what he's going to be able to do.
Now here are Kevin Orrick and David McAlvany.
Welcome to the McAlvany Weekly Commentaries post-election update. We promised this a couple of days ago. I'm Kevin Orrick along with David McAlvany. David, this has been probably one of the most remarkable couple of days in American history as far as radical change in at least what the perception of the mainstream media thought the people wanted.
Well, it is the first time in U.S. history that we have a non-military, non-seasoned politician taking the Oval Office, and that introduces a lot of angst for a lot of people and a lot of hope for others. And, you know, as you look through the contract with the American voter, it's fascinating to see the number of things which are equally offensive to Republicans and Democrats. Basically, he said, I'm not one of you. I told you I was not one of you, and I'm not one of you. He's stepping on toes of everyone.
Well, can we talk about who he's stepped on? Okay. I mean, let's just look at the list. Strangely enough, I'm going to start with people who you wouldn't think he stepped on, but let's go ahead and start with the Bushes. Okay. The Bushes, very much an establishment group of people. We would think Republican, mainstream, but the thing is, there's an establishment machine out there. The neocons, Karl Rove, Nate Silver, mainstream media, Mark Cuban, Hollywood. I mean, look at the list.
Yeah, I've read Nate Silver's stuff before. Nate Silver does a lot of really interesting things with statistics, and he just had it all figured for Hillary.
Right.
And, you know, going back to our commentary over a month ago, we talked about the professor at the State University of New York who's only missed one election in terms of his predictions, and it was in the 1960s because of chicanery in both Texas and Illinois. Otherwise, his model has been a perfect predictor of elections going back to 1912.
Yeah.
And he said this has nothing to do with the polls. In fact, he was one of the first to protest and say, look, you're oversampling on the polls, and they're telling you absolutely nothing. So a part of the embarrassment post-election is that the mainstream media put a lot of stock in that messaging from the polls. And so did a lot of your political elites. And frankly, Wall Street did too. There was not a single Wall Street bank that saw this coming and that sort of had a position on for a positive outcome for Trump.
Well, unless we think it's a diabolical conspiracy, which I can tell you most of the time, I think it's a diabolical conspiracy. All right. But let's just cut them a break. Let me read something from investors.com. You know, the mainstream media's blindness had more to do with ideological and cultural biases than anything else. They simply could not or would not see the suffering that 8 years of President Obama's failed economic policies had wrought. That makes sense because when I'm talking to liberals or people who really felt like they lost on Tuesday, there's a genuine emotion tied to this. They're very sincere.
Well, there is, and there is a fascinating fear that I think is reminiscent of when Clinton and Obama were elected, but it's the same kind of fear that you would have found in a very conservative household,
right?
Where, yeah, this is the end of America. We've got to leave the United States. And this is what we said on Tuesday. Half the population has sharpened their swords for Harry Carey or have packed their passports and are ready to go because the consequences are that dire, or so it was proposed. But, you know, when we've been talking to our clients this last year, when we've been out across the country, meeting with them one-on-one, when we've had our wealth management meeting here in Durango with folks flying in from all over the country, for that, our message was 2016 is a year of transitions.
Right.
And one of the primary issues we're focusing on is politics and culture. Politics and culture is radically shifting. Technology is changing the way that people communicate. You look at the budget of the two primary candidates, and, you know, less than $250 million was spent by the Trump candidacy, almost $700 million spent by the Clinton candidacy. And he ran a very low budget, low ad spend campaign.
But the internet was his friend. People who were actually looking at news other than the mainstream media, the stuff that doesn't cost as much as advertising on the mainstream media, that's where the information seemed to come from.
Right. So if you look at what happened, The first election win was that he beat the establishment of both parties.
Right.
He beat the mainstream media. I mean, of course, he beat Hillary.
Right.
But then he also beat the concept that Obama had 8 years of a successful legacy built, because you have a guy who has virtually no support from his own party, who comes out of nowhere and wins. What does that tell you? Because again, he beat the RNC,
right.
And essentially what happened is the RNC didn't like him because he walked in and hijacked the ticket.
In a way, it's a third party. This may be the first time in my lifetime that I've seen a third party win. Granted, it was calling itself Republican, but it really was not.
Well, that's right. A virtual independent third party candidate on the Republican ticket, and people were voting their frustration. I think of the opportunity that the RNC has today, the need to reflect on their loss in the election.
Right.
Because they lost. They lost as much as the Democrats lost. They lost as much as Hillary lost, because he basically said, you've told everyone that there's all of this at stake and that they need to vote the party line. And actually, if it had been someone else, the RNC would have lost, and the Republican ticket would have lost, just in a different way.
Well, let's talk about the Republican ticket then for a moment, because for the first time since 1928, the GOP controls both chambers of Congress and the presidency. That's the first time since 1928. So, if it's not just a man, and I want to talk about the man here in a moment to see if the man that we saw campaigning is going to be different than the man that we see in the presidency. But before we talk about that, we have platforms that are supported by people, and they call them parties. And then we have a PR man or woman at the top of that party. Most people vote for the PR man or woman, but actually what you're voting for is a coalition of beliefs. Now, the coalition of beliefs, especially of the old conservative, constitutional Republican, let's go back to the Reagans, or let's go even before that. That platform is a platform that we would say is supportive of free trade. It's supportive of good business, lower taxes, right on down the list. We don't have to go down there. But what happens when you have no friction other than these protests that are coming around the country? Otherwise, you've got Congress. We're probably going to have the judiciary, at least for the Supreme Court, and then the presidency. Do we see change quickly?
Yeah, well, I mean, this is the identity problem of both the RNC and the DNC. When they look virtually identical, who do you vote for? You vote for someone who's bombastic and obnoxious and is jumping out of trash cans and is a reality TV star.
Right.
Because there's no difference. There's no difference between the Republicans and the Democrats. So you do vote the person who somehow reflects difference. And I think both parties have tried to say, look, we're not extreme right. We're not extreme left. We're right in the middle. And the closer they move to each other, the less voters say, you don't represent anything.
Right.
And you certainly don't represent me. So you've got this massive swing to the left with Bernie Sanders. And I don't know if it's a massive swing to the right with Mr. Trump, but it certainly is a swing away from your centrist Republican ticket. But I think what's fascinating is, again, you look at his 28 points of things that he wants to do, the 100-day plan to restore prosperity to our country, secure communities, and honesty to our government. It's fascinating. Republicans are going to hate him, really hate him, and Democrats already do. But talking about term limits, talking about freezing hiring at the federal level, talking about reducing regulation. If you increase one regulation, you've got to take two. I mean, I'm telling you, as a guy who is not particularly keen on either party, I look at this and I go, he's speaking my language. He's speaking a language of economic growth, of simplified tax codes. I mean, it's actually something that has a lot of common sense written into it. And so it leads me to this question of who is Donald Trump in the presidency?
Well, then let's talk about the man. The man himself, Donald Trump, who was campaigning. Is he going to change with the gravity of actually being in the position that he was campaigning for at this point?
Well, I don't know, and time will tell. I mean, the issue is I don't know what he's going to do, and I don't know what he's going to be able to do.
But can a man change when they actually have a responsibility handed to them?
Well, and that's what crossed my mind several weeks ago when I started thinking about Henry II and Thomas Becket. Because here you've got these two raucous and rowdy young gentlemen who know each other well and are always getting in trouble. And when Henry II decides that he needs to align the church with the state agenda, with the monarchy, and he appoints his best friend to the role of Archbishop of Canterbury, he does it because he wants a yes man.
Right.
And all of a sudden, Thomas à Becket, he takes this role and he says, I have a responsibility, given the definition of this role, which goes beyond any relationship that we had before. And this is what played out in terms of his actions. He was actually willing to stand against Henry II and not be a yes man. And so my point is, there's no historical analogy to anything other than this singular issue, which is Becket went from being best friends of Henry II to spending 6 years of Archbishop of Canterbury outside of the country because he was afraid his best friend Henry II was going to kill him because he wasn't the yes man that Henry II thought he was going to be. In other words, and here's the point, the role defined the man or redefined the man. And I don't know if coming into this role, he says to himself, I've been a businessman all my life.
Right.
I'm a businessman no longer. I'm the President of the United States, and this role requires certain responsibilities that I have to take very seriously. And again, is there the possibility of a transformation of the man? I have no idea, other than to say there is one instance in history that I can think of where, the guy starts sleeping on the floor and wearing a horsehair shirt because he says, no, I'm a part of the papacy now, and I have to take this role seriously.
Well, and wouldn't it be surprising, and I'm very hopeful, Dave, listening to you talk about Becket and the change there, I'm hopeful that we're going to actually see a Trump that takes very, very seriously what he's doing. It seemed like there was a transition. Just watching, he's not a good actor, to be honest with you. Donald Trump just pretty much, that's what gets him into trouble. He just says what he thinks. But not being a good actor actually helps because in the last few weeks, listening to him talk, it seemed that the gravity of the potential of being president was literally changing him from being all about himself.
Well, and I have to say, I disagree with that because I think he was getting great advice along the way. And his handlers, the folks who were managing his campaign,
they took his phone away. They didn't let him Twitter. That's for sure.
So that's the point, is that he went from being, a low probability win to all of a sudden, somebody on the campaign trail says, now, look, people have to take you more seriously.
Right.
And that means no more of this. Cut this out. No more of that. The shenanigans stop. And now it's the serious face. So if there's going to be a transformation, it's going to be after the election. And again, it remains to be seen. That could be utter speculation on my part, this Becket transformation.
Well, money talks when placing bets. Let's face it. My son and I were talking as we were looking at the election results, and we were watching the markets because the markets usually tell you what probably is going to happen. You and I, we talked that night before it really became obvious that Trump was going to win. Gold was up $30 when I called you. And then gold was up almost $60. Well, that was the response of thinking, oh my gosh, this could actually happen. Stock futures, of course, were down hundreds of points. Now the markets have reversed. All that gain in gold came back down. Everything stabilized. All those drops in the stock market, for the most part, have come back. Do you think possibly the markets right now are evaluating this and saying this may not be a market tragedy?
So the first response was not knee-jerk. The first response was, we are on the wrong side of this completely. We completely underestimated. This is Wall Street saying not a single analyst saw this coming, and we're dead meat.
They were reversing positions, weren't they?
Right. So you reverse positions, and you see dramatic volatility in the markets. But I think it's very interesting. For all the shenanigans in both the gold market and the equity markets, where we had over 1,000-point swing in the stock market. If you look at Dow futures, we were down 800 points and then ended up almost 300 points the next day. So, stocks swung wildly, but the truest message is in the long bond market. That's the truest message, where you've seen the bond market went one direction and it has done nothing but continue that direction. The 30-year went from a yield of 2.57% to 2.87%, a massive swing in a one-day period. And so it raises this issue of one thing we know for sure is that we are in an environment where the market is going to dictate rising rates. And the anticipation of higher inflation in the future is now what you can expect in 2017 and 2018.
Which is a transition that we haven't seen in a long time, Dave. The actual planning for inflation. We've been told deflation now for 5 years.
Right. No, but I have to be very frank with you. The move, which I would describe as the most knee-jerk, is that where now people are pro-equities, right? The knee-jerk response is, look, okay, if he's going to spend money,
right,
and he's going to spend lots of money, then this is positive for the economy. And to me, that is the knee-jerk reaction. It's not the night of the election. The knee-jerk reaction is he's going to spend money and this is going to bring us prosperity. And I just have to say, there is a bad analogy, if that's what someone's arguing, between Reagan and Trump. Because yes, you look at his agenda and there's many things which are positive from an economic standpoint, which we have not determined if they're going to be implementable, okay? Because he does not have a magic pen.
Right.
He can't do everything that he wants to do, although he will have opportunity using the executive privilege and signing statements and everything else, just like Obama and others have done in the past. There will be some things that he can railroad through. But a normal legislative process, he's still going to have some resistance. You might find that his close connections with Schumer and other Democrats, he's not a Republican. Okay.
Right.
He's
third
party. He won on a Republican ticket.
Right.
But truly, he hijacked the Republican Party as an independent and is just as free to play and bring a coalition of Republicans and Democrats together. Now, I mean, look, why was Schumer so silent throughout the whole election process? Because these guys have been buddies for a long, long time. He will get some things through. He's not going to get his 28 points through. But here's the problem. Reagan tripled the debt, right? And did some pro-business things at the same time. We're in a very different environment today and a lot further down the road. Bush added massively to the debt levels. This is Bush 2. Obama added massively to the debt levels, and it did not equate to economic growth. What makes us think that on infrastructure spending and massive deficit spending on the part of Donald Trump, that somehow this is going to create economic activity that both the Bush 2 administration and the Obama administration did not gain traction with, right? So the only hope is that he radically changes the tax code and incentivizes entrepreneurship, taking things and directing the benefits, if you will, to small business owners and mid-tier business owners and away from your very connected major monopolies and Fortune 500 companies. Because honestly, they're the ones who play the best tax game, although their headline tax numbers are sort of 20 to 35%. That's not really their all-in tax number. They're usually less than 10% because of all the games that they can play through international tax arbitrage, which the small business owner does not get to play that game. So if there is a hope with the Trump administration from a tax standpoint, it is directing tax benefits to small and medium-sized businesses and away from. In fact, if he could be punitive with your major corporations, that would be better. Now, what does punitive mean? Taking an official tax rate of, say, 30% and dropping it to 15% with zero ability to wiggle around it and making it taxable on all worldwide income, just like an individual does. You and I, Kevin, if I generate income in Canada, if I generate income in Great Britain as a U.S. citizen, we're the only country in the world that requires U.S. citizens to pay individual income tax on every dollar that they generate anywhere in the world, regardless. But we do not have that same rule that applies to corporations. So a corporation can generate tax overseas, not pay U.S. taxes on it until it's repatriated. So that's why major corporations generate capital overseas, keep it overseas, never pay tax on it, and lower their effective tax rate to well under 10%. If he's smart, he'll level the playing field and say it's a 15% flat tax on major corporations on worldwide income. And actually, he's going to generate twice the revenue he would otherwise if he does so. Now, sorry, rabbit trail.
Dave, for 700 days, the stock market's been over 18,000 or in that range. It's been up and down, but actually it's averaged somewhat sideways. Now, with this Trump election, the first reaction was, oh my gosh, we've got to sell our stocks. Then the second reaction was, oh my gosh, we've got to buy back into the stock market. You and I have also talked about how the reason the stock market has been doing well is for two reasons. Number one is buybacks. The companies have been buying shares back. Okay, that's one of the avenues. The other is the Federal Reserve has just held on by the skin of their chinny chin chin and held on until this election. Bill King calls it the election fix. We see it every 4 years. This election fix is coming off. It's going to have to come off at some point. Now, you've pointed out inflation is an issue, but I want to dig deeper into the artificial hold of the market to start with, and then you can go back to actual true market reactions, because we've lost the ability, we've talked about this for years, we've lost the ability to actually measure risk with prices in the market because of the manipulation, because of the control. Does Janet Yellen keep her job? Does the Fed continue to run the way things did under the Obama administration? Or are we going to see something new where we actually get real responses from real markets in the form of real prices?
Well, this is where I think Trump probably said what he needed to say to get elected. And, yes, he was on the warpath for Yellen and the Fed prior to, but he also knows that the Fed, to some degree, butters his bread. And if he wants to go to war with the Fed, they can make mincemeat of any administration. So, he's going to have to be conciliatory. He's already proven in the last couple of days to be conciliatory with some of the parties, including Obama, just to say, look, we're going to be on the same team. It's okay. We can sort out our differences. We're in a very good place. And I think he'll take the same tack with Janet Yellen, which means that Yellen has to look at things and say, okay, well, what are the numbers telling us? If the Dow is moving higher aggressively, they're going to take advantage of that. And in the context of having positive employment numbers, what are they going to do? They're going to raise rates in December. But I think that begins the long process of a stranglehold on the economy, frankly, because, again, you can't have it both ways. If you want to spend billions of dollars and the market is going to be driving rates higher at the long end of the curve, and the Fed is going to gradually move rates higher at the short end of the curve, you're going to see pressure. You're going to see a natural break on economic growth from the increase in rates. Now, does the increase in rates and the break on growth, is that a worse outcome than the tax benefits that he may or may not be able to deliver? But let's assume that he does deliver them. Which sort of wins out on balance? And what I'm suggesting is that there is so much leverage in the system that whatever benefits you have from a tax standpoint, you're talking about benefits in the billions versus detriments and taxes from an increase in rates in the trillions. So to me, the scales weigh negatively in terms of the detriment of raising rates and what that does consequentially to the economy. Again, I mean, Bush 2 added $6 trillion in debt. Obama added plus minus close to $10 trillion. And it was Reagan who'd first doubled, then tripled the debt from $1 to $3 trillion. I mean, but there was a backdrop, right? And now we have our national debt is greater than 100% of debt to GDP. That threshold is significant. Carmen Reinhart, Ken Rogoff, both have statistically looked at that and proved that that is a threshold. 90% is a threshold. We're pushing 105%. You have a system, though, that is debt-laden, 330% or better if you're looking at private, corporate, governmental debt, all combined relative to our total economy. And if you start raising interest rates, it is a massive tax. It is a massive tax. So at best, you've got to push. You're increasing the quote-unquote tax given your debt service costs relative to the decrease in taxes and what should be an efficiency gain and a growth driver in the economy. I think at best they're neutral, but given the scale of our debt, I think actually domestically and internationally, what happens to interest rates ends up being a net negative.
David, you're a private investor, but you're also a professional investor. What do people do different at this point? Has uncertainty come out of the picture, or could we fool ourselves and say, oh my gosh, that was a win we didn't expect. Let's go buy something like stocks and have a win that we didn't expect. What does a professional investor do right now? I was looking at the markets yesterday, and we had gold down a little bit. We had silver up nicely. We had palladium up, and we had platinum down. It was red, green, red, green. It was strange because these markets were reacting independent of each other, and that doesn't usually happen.
Right, but I think you've got at least 3 months, call it 90 days, maybe 120 days of growth in the industrial commodity sector, where you basically have these groups coming back from the dead.
Preparing for inflation, or is it just coming back from the dead?
Preparing for a major spend on infrastructure. And so all of your industrial commodities get a boost, just like you've seen coal get a boost. I mean, this is the political toxic zone if you're talking about coal, right? And if Obama had been able to pass his legacy of let's kill coal onto Hillary, it would have been an industry that would have been dead, completely dead. And so not only will it come back from the dead, but for the next 6 months, you're probably going to see growth in anything coal related. What I'm saying is there are going to be pockets of growth, but what we talked about this last week and in previous weeks is it doesn't change the fact that tax receipts for your Fortune 500 companies have been in decline for 2 years. And the money that they're making, regardless of what happens to the price of stocks, the economic fundamentals of those companies continues to deteriorate.
Revenues are down.
So really what you're talking about is a market that is going from a risky level to an even higher risk level because the difference between the economic realities of your Fortune 500 companies and what the price of those companies reflects based on a new justification or rationalization of prices being marked higher, it means that the implicit risk in the market has never been greater.
It's already baked into the cake. It doesn't matter whether Trump is taking over or whether Clinton would have been taking over. It's baked into the cake.
Well, what's baked into the cake is in 2017, I think we still have a recession. And as we march higher with stock prices over the next 30, 60, 90 days, based on the impression of a massive infrastructure spend, which, by the way, there was going to be a massive infrastructure spend whether Hillary came in or Trump came in, which again says to me this is not a reflection of reality. This is a rationalization of having been wrong. And now as we come into year end and performance gaming for 2016, you've got investments and asset managers saying, we can play this theme. We can play this theme through the end of the year. But again, you still have what is baked into the cake is that you've got a declining trend in terms of revenues, a declining trend in terms of tax receipts, which tells you corporate America is suffering. They are in a pre-recession or recessionary state, even now as Wall Street creates a new justification for throwing caution to the wind and buying stocks. So to me, it is going from a dangerous environment of the Dow at 18,000 to maybe topping 19,000 by the end of the year. And what you're now doing, it's like this. A cliff jumper says to himself, I can handle 30 feet, no problem. It's a little bit more treacherous to climb at 60 feet higher and to be jumping from 60 feet. Then a cliff jumper, a diver, if you will, goes to 90 feet.
Right.
I mean, at some point, you're talking about terminal velocity, and you have to realize that falling from a higher height does have a consequence. I mean, you realize you take a watermelon and pitch it off a cliff into the water at 90 feet, it blows up when it hits the water. And yet a cliff diver will still do 90 feet. There are thresholds, however. You get to a certain level, and you're talking about terminal velocity. It doesn't matter if you're a watermelon or a diver.
Dave, before we close this special edition of the McAlvany Weekly Commentary, I want to ask just a really simple question for everyone, because we've been getting a lot of calls. They're saying, okay, now that Trump's in, what do you think about gold? Has anything changed in your outlook on the price of gold?
Nothing has changed. And here's what I see. I'll give you an example. Two different views. A Druckenmiller who sells all his gold on the night of the election, saying it's different, rates are going to rise. And a Ray Dalio, on the other hand, who manages far more money than Druckenmiller ever did. And he says, absolutely not. Look, rising rates are a very big deal, but it's rising real rates that still matter. Right. So if you're going to see rising rates and inflation marching up at the same time, then nothing's changed. And in fact, every asset class is at jeopardy. If you see rising rates, that is going to tank stocks. This is what Dalio would say.
Right.
If you see rising rates, you've got a massive bear market in bonds. And if the equation is a real rate equation, where you factor out inflation from the rise in rates, guess what remains in play as a very, very valid asset to own from a growth perspective and a strategic risk mitigation perspective? Gold.
Right. Keep your cash, keep your gold, watch the situation as it unfolds. You know there's going to be fiscal spending, but right now is not the time to invest in that proposition.
No, that's exactly right. So if we see a knee-jerk reaction in the metals market to quote-unquote rising rates negative for gold, you need to think beyond that. You need to see through that it's rising real rates, okay? And we already have the promise. We already have the promise from our Fed chair that they want a faster growing inflation rate. So if the market is marching up bonds, as we've seen, a massive move this week, the most significant thing that happened in the market this week was the 30-year and the 10-year marching higher. And I'm not talking by a few basis points. This was a massive move in yield.
So if you're looking for a signal, there's your signal.
And why is that so significant? Because it actually is at the far end of the curve where the market is moving things and not the Fed manipulating things. Okay, so to me, that is everything. Factor in a rising inflation rate with a rising rate in yields. And I think gold is one of the best things that you can own in 2017 and 2018. It wouldn't be surprised to me to see the knee-jerk response of gold to drop to 1,200, 1,210, 1,220, that range back to the 65-week moving average. And if you're a person who appreciates gift, I would look at that as a gift from the marketplace.
You've been listening to the McAlvany Weekly Commentary Special After Election Edition. You can find us at McAlvany.com, McAlvany.com. Give us a call at 800-525-9556.
This has been the McAlvany Weekly Commentary. The views expressed should not be considered to be a solicitation or a recommendation for your investment portfolio. You should consult a professional financial advisor to assess your suitability for risk and investment. Join us again next week for a new edition of the McAlvany Weekly Commentary.